Greetings, debtors and penny pinchers. If you're watching this video, chances are you're familiar with the feeling of drowning in debt while your income barely keeps you afloat. Don't worry, you're not alone. In fact, according to a recent study, the average American household carries a whopping $137,063 in debt. That's enough to make Scrooge McDuck choke on his gold coins. But fear not, my financially challenged friends, because today we're going to talk about how to get out of debt on a low income. Yes, it's possible. It won't be easy, and it won't happen overnight. But with a bit of determination, creativity, and some clever strategies, you can chip away at your debt and eventually break free from its shackles. So grab a notepad, a cup of cheap coffee, and let's get started on this debt-busting journey together. Understanding debt. Debt is an obligation that requires you to repay borrowed money, often with interest. Common types of debt include credit card debt, student loans, and mortgages. In the United States, household debt reached a record high of $14.56 trillion in 2020. Being in debt can have significant psychological effects, such as stress, anxiety, and feelings of hopelessness. However, not all debt is bad. Good debt, like a mortgage or student loans, can lead to increased wealth and financial stability, while bad debt, such as high-interest credit card debt, can have detrimental effects on your financial health. Assessing your financial situation. Before tackling your debt, it's essential to evaluate your current financial status. Start by creating a budget that outlines your income and expenses. Track your spending to identify areas where you can potentially save money. Once you have a clear picture of your financial situation, set realistic and achievable financial goals. This will help you stay focused and motivated throughout your debt repayment journey. Strategies for reducing debt. Debt snowball method. The debt snowball method is a debt repayment strategy in which you focus on paying off your smallest debts first, while making minimum payments on larger debts. As you pay off each small debt, you snowball the payment amount into the next smallest debt, gradually increasing your payments as you eliminate each debt. This approach helps build momentum and keeps you motivated as you see tangible progress. For example, if you have debts of $500, $1,000, and $2,000, you would focus on paying off the $500 debt first, followed by the $1,000 debt, and finally the $2,000 debt. According to a study by Northwestern University, people using the debt snowball method were more likely to eliminate their debt, as the small wins helped keep them motivated. Debt avalanche method. With the debt avalanche method, you pay off your debts in order of the highest interest rate first. This approach can save you money in the long run by reducing the total interest you'll pay. For example, if you have a credit card with a 20% interest rate, a personal loan with a 10% interest rate, and a student loan with a 5% interest rate, you would prioritize paying off the credit card first. A study by the Federal Reserve Bank of Boston found that the debt avalanche method saved consumers an average of $200 in interest payments compared to other repayment strategies. Debt consolidation. Debt consolidation involves combining multiple debts into one loan with a lower interest rate, making it easier to manage your payments. For example, if you have several high-interest credit cards, you could take out a personal loan with a lower interest rate to pay off all the credit card balances. This will simplify your payments and reduce the overall interest paid. According to a study by the Presidia Economics and Finance, debt consolidation can lead to significant interest savings and improve credit scores by lowering credit utilization ratios. Negotiating with creditors. Reaching out to your creditors and requesting lower interest rates or payment plans that fit your budget can be an effective way to reduce your debt burden. For example, you might ask your credit card company to lower your interest rate or negotiate a settlement on a delinquent account. A 2020 survey by LendingTree found that 93% of credit card holders who asked for a lower interest rate were successful in their negotiations. Prioritizing high-interest debts. Focusing on paying off high-interest debt first can minimize the overall amount you'll pay in interest. For example, if you have a credit card with an 18% interest rate and a student loan with a 6% interest rate, paying off the credit card first will save a lot of money in the long run. Increasing income. Even on a low income, there are ways to increase your earning potential. Consider taking on a side hustle or part-time job, freelancing or working remotely, and seeking government assistance or social programs. Additionally, investing in your personal development and education can improve your job prospects and help you secure a higher-paying job in the future. A side hustle is a way to make money outside of your regular job, using your skills, talents, or interests. It can help you pay off debt, save for a big purchase, or achieve your financial goals. There are many types of side hustles you can pursue, depending on your availability, preferences, and skills. For example, you can start a dropshipping business, where you sell products online without having to buy or store any inventory. You can also become a coach, a tutor, a life coach, a tour guide, or an affiliate marketer, among many other options. Some side hustles can be done online, while others require you to meet clients or customers in person. A part-time job is another way to supplement your income, especially if you have a flexible schedule or can work during evenings or weekends. You can look for part-time jobs in your field of expertise or try something new and different. Some examples of part-time jobs are retail sales associate, customer service representative, delivery driver, babysitter, or dog walker. Freelancing or working remotely allows you to offer your services to clients or employers from anywhere in the world. You can set your own rates and hours and choose the projects that interest you. Freelancing or working remotely can be ideal for people who have skills in writing, graphic design, web development, accounting, marketing, or other fields that can be done online. Seeking government assistance or social programs can help you cover some of your basic expenses, such as food, housing, healthcare, or education. Depending on your eligibility and location, you may be able to access benefits such as unemployment insurance, food stamps, Medicaid, subsidized housing, or student loans. These programs can help you reduce your financial stress and focus on improving your situation. Building an emergency fund. Having an emergency fund is crucial for financial stability, as it can prevent you from falling back into debt when unexpected expenses arise. Aim to save at least 3 to 6 months' worth of living expenses in a separate, easily accessible account. Start small by setting aside a portion of your income each month, and gradually increase the amount as your financial situation improves. Adopting frugal living habits. Living frugally can help you save money and pay off your debt more quickly. Some tips for frugal living include cutting back on dining out and cooking at home more often, shopping for groceries in bulk and using coupons, eliminating or reducing non-essential expenses, such as subscriptions and memberships, taking advantage of free or low-cost resources, like public libraries and community events, staying motivated and avoiding future debt. Stay motivated by setting smart, specific, measurable, achievable, relevant, time-bound financial goals and tracking your progress. Learn from past mistakes and adopt healthier financial habits to prevent future debt. Celebrate your milestones, such as paying off a credit card or reaching a savings goal, to keep your motivation high and remind yourself of the progress you're making. In conclusion, getting out of debt on a low income may seem daunting, but with determination, discipline, and the right strategies, it's possible to achieve a debt-free life. By understanding debt, assessing your financial situation, reducing debt, increasing income, building an emergency fund, and adopting frugal living habits, you can pave the way towards financial freedom. Stay committed to your goals and don't forget to celebrate your achievements along the way. We hope you found this video helpful in your journey towards a debt-free life. Please feel free to share your experiences in the comments below. And don't forget to subscribe to our channel for more content like this. Thank you for watching, and good luck on your path to financial success.